much love to you for those questions. You seem like a hungry soul. So I really wanted to tune in, get a live call here, hit a question or two, dive into it, because I'm sure all these questions equal to really one main question. So I want to give you some clarity and some thoughts, and then hopefully from there, man, you attack life. How's that sound?
Sounds amazing.
Awesome, dude. So what's on your mind?
Should I just shoot? Right? Are we just ready to go?
Yeah. This is your call, man. This is your call. You know, I'm here to give you my non-refundable minutes. So let's see what I can give you, man. And if I have experience in it, I will give you my thoughts. If I don't have experience, I will humbly say I have no experience in that.
First of all, thank you so much for giving me your time. This is incredible. My first question I have is, when did you make the shift from doing property management in-house to third party?
Yep. So what I did, I made that shift, to be exact, 333 units. So when I got up to the stage of 332 units, it became an issue where my capacity was at jeopardy, meaning that I wasn't very efficient. Actually, it was costing me more than I should be actually paying for. So after 333 units, I outsourced all property management. And what I found out, it nearly cut my expenses by running the 333 units by over 70%. So today, with about 2,500 units, I outsource every single one of those units. And then from a hierarchy, I go ahead and manage the property management company, actually to rents, to efficiencies, and to expenses. So I'm working really smarter and not harder. And you wind up, focusing more on what's more important and what truly matters to move the needle. So 333 units.
Wow, that's incredible. How many employees did you have at that time managing those 332 units?
Wow, and this is just a wild guess. How many employees did I have up to the time I outsourced the management? I would honestly say probably 20, and I'm just guessing. That's a good guess, 20. And let me tell you, there was a lot of energy spent. So what I would do if I was you is, you don't have to take your portfolio to 330 before you pivot. What you should possibly consider is maybe getting it up to, how many units you have right now?
143, and I'm closing on 27 on next Monday.
So you have 143 units, and you're closing on another
total.
27. So you're going to be at 170 units. So you're at a scale now that you should be considering outsourcing that management. Because I would say no more than 200, because what's happening, whether you like it or not, you're learning so much being self-managed. You're learning the fundamentals. And what that means, dude, like I did, I was able now to lead at a hierarchy because I know what I was doing being in the trenches. So you're getting that good experience that most don't get experience on, is actually being in the trenches. But you're getting to the point where you should be outsourcing that, and you're going to find out you're probably going to save you 50% and more capacity to maybe manage at a higher level and maybe do some other things.
I'm just so scared of giving it away. I had a management company manage my units before. I had 2 apartment buildings, and I gave them my properties to manage, and they just did a really bad job. I had vacancies. They just didn't care. They just slapped a notice on the building when we bought the property, saying here's how to pay rent, here's how to do maintenance calls, and there's no, you call the main line, they don't pick up. You put a maintenance request, it gets, no one looks at it for a week. It sits on.
Well, let me ask you a question on that. Not to interrupt you, I'm sorry. When was that? How many units did you have when you attempted that?
It was a 24 unit and a 30 unit building.
Okay, cool. So you had 54 units. You're far more experienced today. With you nearly have 3 times the units now. You know now what to look for in a management company. You know how to interview a management company. You know to interview multiple of them, and you want to have authority from a hierarchy. So you'll be so surprised when you re-enter that effort. You're going to find the right management company. Before, you probably didn't even know what you were doing compared to what you know now. Would you agree?
I agree.
So don't give up on that, dude. Just because you were inexperienced then, you're far more intelligent now in the space. So you're going to really easily get to the management company that matches and aligns with your policies, your core values.
Wow.
I used to be the same way, man. And I should have gave up on it a little bit more versus going down a rabbit hole with 330 units. But I had no idea, but I'm grateful for it because it taught me so much. Now you're in a far more advanced area than I was at your age. How old are you?
22.
Dude, impressive, man. Impressive. Very impressive. So why don't you go ahead and consider maybe going back into that effort just for an experiment and interview some of these management companies, the right management companies that do have, the CRM, that do have the fundamentals, some AI, which is artificial intelligence that I use today on my 2,500 units. We use an AI yield star where it manages the daily rents. Either they go up or down. We're really always in the market, but don't give up on that, man.
You said it's called Yield Star?
Yield Star.
Okay.
So what it is, it's you pay X amount per door. Let's just say you pay $25 a door, $7 a door. I don't know what the price is today. What that does for us, out of our 2,500 units, every day a report goes out to all the property management companies or property managers of all our properties, and the rent roll changes, meaning the one bedroom today can be maybe $200 more than yesterday, or $60 more, $40 less. What we want is always to capture market rents, because as you know, in multifamily, you want to really be on your toes and not give away your rents, because rents determine valuation. As long as you control the expenses, you get a far greater NOI, which is a direct reflection of the cap rate. Yield Star. Go to that, go do a Google, go to Yield Star. You probably don't need it until maybe you're about 500 units or more. But the more you look into that, you'll find out how AI is changing everything.
That's incredible. The next question I have is, how long did it take you to go from 100 units to 1,000?
So, my story's interesting, and I don't know if you heard about it before. I went big when I got into the space, and I almost filed bankruptcy. I had no clue I was doing. I did not start small. And I didn't realize what I'm about to tell you as a 22-year-old younger Bobby, man, because you're much better than me at this age. Anything that's big today, you see my success today, it didn't start here. It started very small. It started -0. Remember, be very patient. There's two things that I'm going to give you I'm going to give you an example of two cousins. One is desperate and one is urgent. Follow me so far? Okay. Desperate behaves different than urgency. When you mix urgency with clarity, you're really on your game. I used to be caught up with how many doors I had, almost like when I sold that company for $1 billion and you met me on the street. Hey, Bobby, what do you do? I'll brag and tell you, I own a company. And right away, my next word will say, I have 50 employees, because I determined that was success. And that wasn't a fact. I wasn't efficient. I was fat. Same thing in multifamily. I know doors do matter. But in the beginning of your career and your investment portfolio, don't rush to get so many doors. You'll become desperate and you're going to be making mistakes like I did. And that's why I almost filed bankruptcy. I had no clue what I was doing, dude. And I was so desperate, I scaled and I almost filed bankruptcy, including the company that we sold for $1 billion. I guaranteed that company. Had no clue I was doing. What you're doing at the age of 22 years old is extremely impressive. I want you to get more clarity in your life, because when you do, man, you'll be a king in this industry. But what you want to try to do is prevent the mistakes I did. And how you prevent that is get more clarity about your investment theses, and you'll find out that every deal is not a deal.
That's the same problem. Like, that's what I'm scared of. I'm scared of scaling too quickly without proper management, and it all comes crashing down. That's exactly what I'm a couple of my mentors tell me. Everyone I talk to, they're like, are you sure you can manage what you're doing? And I'm trying to slow down. I'm trying to buy one building at a time, and really trying to ask people a question. That's why I bug people on social media. That's why I'm DMing you and asking so many questions, because I'm really.
And I love that, dude. I respect that about you. And just check out this. This is a good data point. You had no idea what Yield Star was. You had no idea about this AI. Can you imagine how much you don't know that you should know? Imagine the more you know about this. Can you imagine your next buy? Can you imagine how sharper you get? Don't rush to buy deals. In real estate, dude, it's always going to be here. What's not going to be here if you don't invest your time wisely is the information I'm telling you that you need. You're so curious that it's awesome. I have a book. I don't know if you know about this. It's called Upsiders. You can get the book.
I'm reading it. I'm halfway
awesome,
through.
Man. Well, I talk a lot about this. So I want you to be more focused. And how you get focus is from clarity. And when you have so much clarity, then you have the urgency. But you need to know more about the management. Management is really easy. A lot of people think it's hard. But if you surround yourself with the resources, man, that is how you're going to scale when you understand management. It's very easy.
Yeah, because for me, it's becoming like overwhelming, and I don't enjoy management because it doesn't make any money. I love acquisitions, and I'm really good at acquisitions. I'm really good at finding really good deals, but like management's getting tiring, and I don't enjoy it at all. Like I have one employee right now, and everyone else is like commission based. They're all just like contractors you call in for a certain task or a certain job. So I only have one guy that works for me full time.
Well, what I would propose you to do, and of course, I'm just giving you my humble thoughts. You're going to be at 170 units here after this acquisition of 27 more units. When you get to 200, be sure you outsource to management. But until you get to 200, it's your job, your duty to understand more how to be efficient, not to have the heartburn that you just disclosed to me. Oh my God, this, that, I'm just exhausted from it. It's time to be efficient. Management should be easier than that.
Because the acquisitions is so easy for me. Finding deals, and when people tell me like finding deals is so hard for people, for me, like it just comes naturally. And I'm really good at seeing value and buying good deals.
And how are you able to find all these good deals with no problem? I mean, what type of debt are you getting on it? Or just tell me about, tell me about the 27 units you're about to close.
Like I just have such an abundance mindset that I just know I can always find a deal. The 27 unit deal came from networking. Like I was networking with people, and this broker wanted to take me out to lunch, and I was like, sure, I'll take the free lunch. We got lunch. I didn't think anything of it. He's a real estate broker in town. Like a month goes by, he brings me this phenomenal 27 unit deal. I'm like, I'm a buyer, and we go under contract.
Is it? You sound like you're from New York. Is it in New York?
No, I'm from Boston, but this is in Little Rock, Arkansas.
Okay, cool. Okay. And so what's a cap rate? In place cap rate with the adjustments of insurance and taxes?
I don't really believe in the cap rates. I can give you the cap rate number. It's a 12 cap rate, performer cap rate, not current. I don't really believe in the cap rates because I'm not buying the building as it's an add value deal. It's currently bringing in $15,000 a month, and I'm going to take that number to $35,000 after I increase the rents and do minor upgrades.
So you got $180,000 a year in annual total gross income. Does that include other income and everything? 180?
I would say so. Yes, that's current. With 4 vacancies.
They call that in place.
Yes.
Now, how much are you buying? If you don't mind me asking, how much are you buying this for?
2.25.
2.25. So I'm just going to do a back of the napkin scrub. I'm not too familiar in your particular area where you invest in, but let's just stress it out. Because as you know, a lot of things are getting expensive. Property insurance is double digits year-over-year increases. Same thing's happening slowly with property tax, etc. So let's just go 180. What do you think your expenses will be percentage-wise? 180, 50%, 45%, 40% of the 180. What do you think expenses not including a loan?
I usually use 30% on my
30%.
Because I have really good, like my expenses aren't very high because it's all in-house currently. It's not like if I use a PM company, it might be higher, but currently I do 30% expense load.
Let's just stress it out and let's just say it's going to be 38%.
Okay.
I'm going to be your lender and I'm going to throw you a mulligan. I'm going to say you're at 38%. So what you do is you take 100% minus 38%. You have left over 62%. 180 a year times 62%. You got 111,600. Let's just stress it out. Let's just call that 110,000 NOI, net operating income. 110 without your closing costs. Divide that by 2,225,000. That's a cap rate of a 4.9. Call it a 5%. So you're buying a cap rate of 5% based on 38% in expenses.
Yes.
Now those expenses, that includes, are you putting away reserves every month for a unit turnover? Are you putting any CapEx into this deal?
Yes, I have budgeted $400,000 in renovations, but I believe I only need $250,000.
Are you going to borrow that money? Are you paying it out of your own pocket or investors?
It's a construction loan, so the first 12 months is interest only, and then it perms into principal and interest after the 12 months.
Okay. So is the loan, how much you putting down on the 2.25? What's your leverage?
15% of purchase and 100%
Wow.
financing of construction. And
So
before you say I'm
85%
over,
leverage.
maybe before you say I'm over leverage, it appraised for 3.25.
Got it.
So I know the market. I own a building 14 blocks away from this place, and that place
Okay.
appraised for 120,000. So I knew this was in a better location. I could charge more in rent. So
Got it.
everyone's
So-
like, yes, sorry.
Okay. It's cool. No, let's keep going. It's cool, dude. I get it. 85% leverage without your construction loan, right? So where are you getting the 15% down? Are you putting that up? Partners, investors?
Partners 75-20%, 75-25% on the down payment, and we own it 50-50. It's one investor.
So you're putting 25%, he's putting the 75% of equity, and you go 50-50.
Yes, sir.
Nice deal. That's a great relationship. And he's going 50-50 on the cash flow and any refi and or sale.
Everything.
Got it.
It's just a simple
And are you-
LLC,
Yep.
50-50 ownership.
Got it. Any personal guarantees?
I do. I sign on the
Your
doc-
personal
he does
guarantee.
it.
Got it. Okay. And is it like a private lender, a debt fund? Is it a 1-year
Local
note? Is it a
bank.
3-year?
Local bank, 20-year fixed, 25-year amortization.
Got it. At what rate?
7%.
Gotcha. And you already got your quote on your insurance premium, annual
11,000 a year.
11,000 a year. And is the rents month by month, or they're all locked in for 1 year? When do they burn off?
There's only 5 leases in place, and there are 23 tenants, so 18 of them are month to month, and then 5 of them have a lease.
Gotcha. And as soon as you close, you're going to give them the 30-day notice, I would think, and increase the rents before you CapEx, or you kicking them out?
No, I'm gonna. There's 4 vacant, so I'm gonna renovate and rent those immediately. I'm not gonna kick out my tenants because I'd lose all my cash flow.
Gotcha.
Like I need to make that payment.
Okay, I get it. But aren't you going to increase the 18 that are month by month? Can you increase them? It sounds like the rents are low, right?
I'm scared to do them all at once. I'm gonna call like 5 at a time. And
Gotcha.
and like, yeah, I'm scared to do them all at once because
Okay.
I feel like half of them will leave. I've experienced like half will leave when you increase rent, and I don't
And
want
what's
to
your
lose the
prepay
cash
on this?
flow.
Any penalties on your note?
It's a hedge. So if interest rates goes up, if I sell, I get a check. If interest rates
It's
go
a swap.
down,
Yep.
it's a swap. But I'm not interested in selling real estate. As you can always see, I got $750,000 in built-in equity on this deal. As soon as I'm done with the renovations, I'm gonna do a line of credit and pull money out and go buy more real estate.
And when do you project that happening?
Best case, 6 months, I'll be done with the renovation, increasing rest. Worst case, 12 months.
Okay. And then you're fixed on the 7%? It's not floating, right? You're fixed?
20-year fixed.
20-year fixed. And it's interest only for the first year you mentioned.
Yes, sir.
So after that first year, the payment goes up because there's principal
And
added in.
interest.
So if you don't execute on certain things within that first year, things do change on this deal.
Yes. Yes.
So
But,
what's the hedge then if you're not able to execute for a number of reasons? What then? Will you be break even, negative cash flow?
I will definitely execute because I know the market so well. I know I own a property down the street. I know what I can get for rent, and I will rent them immediately. I have no vacancies on my properties.
Got you. Okay. So now let me ask you a question.
I'm very confident in getting units leased.
I love it, dude. I love your attitude. I love your appetite. So what is your policy when you move somebody in? What is of course, you have your normal background check, you have your verification, but do you do 3 times income? Meaning that if you're going to rent something for $2,000, they got to be making $6,000 a month. Is it 2 or 3 times income? Do you have a policy?
I do 3.5 times income, no felony,
Awesome.
no felony, no criminal background, and credit score at least 600.
Got you. Now, are you putting rent increases? Are you going to lower some of these expectations that's coming about instead of these 15, 20% increases? Are you looking in 2024 I'm just curious so I can share with you because I love to speak to another investor. I mean, how do you see?
They're just so behind market. It's not like, I'm not buying a stabilized asset.
Gotcha.
They're renting for $700 a door and I can get like $1,300. It's not like a 20%
Gotcha.
increase. It's like 100% increase. And I've done this on multiple buildings already in town, in the same city. I bought a building down the street, was renting for $13,000 across 24 units, and I increased the rent to $27,000 after renovations and turning tenants over. So it's not like a 20% increase. I'm just bringing everyone to market, and I've done this on several properties, and I see this opportunity to be able to do another one with an owner that doesn't care, with an owner that doesn't do good property management. He's a full-time banker.
How old is the building?
1949.
So there's plumbing is cool. Are you doing any capex on plumbing, electricity?
I cambered the plumbing. Plumbing was fine. Electricity, like, I'm not sure how to check if it's old. Like, the apartment, like, you go check every outlet and it works, and the breakers look fine. Like, I'm not sure how to, like, look into that more. I had my mentor walk the building with me. He thought it checked out pretty well. But, of course, there's always going to be problems. I'm always going to have expenses.
Yeah, no. It's going to hit you. It will hit you. Heartburn will hit you, but these are lessons. This is part of the growth because you're very aggressive. You're young. You have a huge appetite. I love it. The only thing I'm going to knock you here, man, is leverage 85%. I mean, God bless you, dude. I mean, and I know I was 22 years old before. I would caution you to be a little bit more conservative on your financing because it does make a difference when things do change, being over leveraged. And you remember I told you I almost filed bankruptcy, man? I interviewed 2 or 3 attorneys, and it never happened, thankfully, because I got refocused on my business. It was all about high leverage, overpaying, just different things. And I do think, and I think you will agree, the market's going to change with these lenders and banks. They're going to tighten up because of what's going on. And it's safe to say you already got that commitment. They're locked in. They can't back out.
Yes.
Okay, good. Do you expect that to change, or do you expect this bank to continue to give you 85% leverage?
I'm not sure. Like, I don't have a crystal ball. I'm not sure what they're going to do in the future, but they're a small local bank. A community bank. So I know the space quite well because of my previous business and all the multifamily I own. What I would love you to do, dude, I would ask you to be very mindful to know that things will change in the lending space for a moment in time. These banks will have notices sent to them. They're going to, just examiners may be in there just to recheck everything and making sure ratios are in order. So just be sure before you're buying out new deals, again, this 85% leverage, that's a lot. That's a very lucrative relationship you have, but I would expect that to change for a moment in time here in the near future. Even though it appraised for 3.25, so my leverage isn't really 85%. You still consider 85%?
I get it. I know. I get all your rebuttals. I totally get it. But the market is changing, and that appraisal, I don't know how they're coming up with it. The appraisal is based on what cap though? Because if you go 3.2, you're talking about you're buying it at a 5. That appraisal cap is probably a 2.5 cap.
No, I don't know. They appraise it on future value. Once they looked at what I'm going to increase the rents to.
And what was the future value of the cap rate, though? The cap rate had to be really low to get that future value.
7%.
A 7 cap? Based on what NOI? What's your NOI on the future? So you take that future NOI and you divide it by 7. That should give you that appraisal amount, 3.2. If it doesn't, that's not the NOI.
Net operating income after expenses is $300,000.
$300,000. And then you divide that by 0.7, that's a $4.2 million deal.
Yes,
so that's not a 7 cap. So
I have to pull up the appraisal, but it's not exactly accurate.
I got you. So 300,000 divided by 3.2, that's a 9 cap. That's like so. Anyway, this is all good stuff, man. I challenge you is recheck your numbers, this and that. The tough thing about being 22, man. You got a lot of testosterone in you, man. You got that giddy up, and I love it. And sometimes we need to fall victim to some mistakes. It's going to happen. It has to happen. If not, you're not growing. If not, you're not taking risk. If not, you're not, you just can't keep finding these deals without realizing it's not a deal. But, what else you got on your mind, dude? I got 5 more minutes for you.
Why do you like Class A buildings versus Class C buildings? My question, the reason I'm asking is because a mentor of mine doesn't like Class A buildings because the tenant quality Like if something breaks, they want it fixed immediately. Class C, if something breaks, like they're lenient and they understand and like they're okay with it not being perfect. Number two question on that, like the properties are so expensive, so how does it even make any money? Like I'm getting 30% cash on cash return on my deals. Sometimes even 40% cash on cash. And some of these like big deals, like you're just never going to see those numbers.
Yeah. I totally get it. Great question. So check this out. When I started like you, I was in section 8. I was in actually class D and then C and B. And the reason I was there, it's more affordable to play in that area. But I just want to remind you, the deal you're buying is a 1941. The deals I buy are 2001. So that comes with a price point, right? It comes with the fact that you're buying 30% cash on cash and I'm buying, say, 5% cash on cash. So I'm looking for a tenant base and you're going to scale in life. It's going to happen to you as an investor. The reason I was in class C and B was because of the affordability component. I started in real estate and I was able to dabble and play in that area because of the fundamentals of the dollar point. But slowly but surely, I started paying attention to data points in particular cities and areas, and I follow jobs, and I follow high-end jobs, primarily in healthcare and technology. So I like to deal with high-income earners that are in spaces and in industries that are really in demand, not only now, but in the future. So I follow that demographic, and I'm into now in my life, I'm 56 years old, I am about legacy assets. So I cannot leave my granddaughter and grandson and my future grandkids 1941 vintage. I need legacy assets. These are trophy pieces, meaning that the real estate they sit on is priceless. So as you migrate in life, it depends on all your wants and needs. I'm all about legacy, financial generational wealth. So I'm buying assets that my grandkids at my age, they're still going to be around. So this is just a preference. Some people want to stay parked in that high cash flow. There's a higher cash flow you get. It's awesome, but there's risk that comes with that too. I just don't want to tolerate with that risk. I manage risk at the point in my life as you continue becoming financially free and all that. Now you're managing risk. In the beginning, you're going to take high risk, that big cash flow, that 30% cash on cash, those 12% cap rates. You can stay parked there and live there, but just my way I look at life, I want to leave legacy assets. I'm buying assets that are never going to be sold. Hopefully that answers your question.
One thing on that, you're talking about risk. If there's less cash flow, isn't that more risky?
No, so the less cash flow means it's less risk. Higher cash flow means you're subject to higher risk. Just like lending, if you lend money to somebody that has a 550 FICO, you're going to charge maximum rate. Why? It's a higher risk. Folks that have a very, very low rate have a lower risk. For example, if you lend money to me, you probably have a low risk versus if you lend money to somebody else that's working their way up in life. So the higher the return on cash flow, cap rates, when you buy a deal, 12 cap going in the deal, you're buying in areas that I used to buy, which is great. I grew up in these areas, but you deal with a lot of heartburn. Collections here and there. In the last few years, you haven't seen that because you're 22 years old. You will see a different cycle where, as you continue migrating in life, you will see the world change where people are not standing in line at Louis Vuitton no more. When all this relief money goes away a little bit and all of it burps out, you'll see a different behavior. We had a great 15 years. You were born in this world, my brother. It was a home run, but it's going to be great as you as an investor. I want to beg you to pay attention to data. Get on Barron's. It's a paper, barrons.com. You seem like a very curious dude. Be all over Barron's and also another paper called Financial Times. Understand, for example, if I asked you, what is the 10-year treasury today? What would you say? Don't look it up. Just answer it. You know what it sits on today?
Couldn't tell you.
Okay, that's cool. The 1 month SOFR, do you know where it sits today?
No.
Okay, cool. I want you to go to a website called Chapman and go do a Google, go Chapman forward curve on Google. Start to understand how important treasuries are to real estate. Primarily invest in real estate, multifamily. You will find out the 5-7 year, primarily the 10-year treasury is a heartbeat of our country. This is what I'm talking about. This is where a lot of awesome young people that have really a big appetite like you, can you imagine with the energy you have, the confidence, The only thing you're missing, like I missed, not to dive into these boring things I'm talking about. If you dive into this stuff, dude, you're going to be that much sharper. But for a 22-year-old, it's going to be hard. Because remember I told you, desperation and urgency, they behave different, they're related. I want you to have more clarity of how data works and how investment theses, the policies work, how important treasuries are. Once you understand that, dude, you will start maybe heading a different direction. What's great about real estate, man, there's so many asset classes. There's some people that just love to stay in Class C, which is totally cool. They work their way up to B like I did. I love B. I stayed there for a while. Now I'm developing deals. I'm still buying value adds, but I'm moving up in vintage, meaning newer stuff, because why? I'm leaving this stuff behind for my grandkids.
Question. So you're talking about people are going to stay in line and like Louis Vuitton and buy those things. That's exactly what I believe in. And so like the Class A luxury buildings, like won't those vacancies go up and they're going to rent more affordable housing? Like I own affordable housing. Like my rents are very low. And like, aren't they going to like, I'm always full. And I've talked to people in 2008, they were full too that own these affordable housing, because people that couldn't afford these $2,000, $3,000, $4,000 apartments, they rented the ones that like $1,000. Those always stayed full.
Yeah,
because
it makes sense. But check
Oh,
you're right. You're right. But check this out. You got to make sure you're listening to me though. What did Bobby say? Bobby focuses on mainly two areas: healthcare and technology. Now, do you think technology is going to go anywhere?
No.
It's got started. You think all these coders, these programmers that we desperately need that make $250,000 a year, you think healthcare is going to go anywhere? These two industries are just thriving and growing. That is who my tenants are. I am all about workforce housing. I have Class B today. I have hundreds of units of Class B. So I like to stay in mainstream there. All I'm saying is that I'm moving up in newer vintages and I'm following where the jobs are going to be 10 years from now. And these are in two areas.
Where do you think they're going to be?
Technology and healthcare. So for example, Amazon. I'm sure you heard about it. So Amazon, it gets everyone's news. You get excited and I get excited. Oh my God, Amazon's coming in the city. My property, Bobby, is 1 mile away, man. All these jobs. I want to give you a fact. You go into an Amazon fulfillment center, you're going to see all robots and you're going to see very little humans like you and I. They only there to grease the robots and do programs. It's all robotics. I am telling you, how I view the world, technology, what you and I are creating, is going to be the self-destruction of a lot of jobs. What that evolves into, I don't know. Something great again. I'm just moving up in newer vintages, legacy assets. I am not criticizing your asset. I've made a fortune in your asset. Because of the assets that you're in, I'm sitting here today. That's where I start. I'm not criticizing you. I think it's a great asset. I'm just growing in different areas.
What cities do you like to buy in?
Florida, Nashville, and areas of Texas. So I am in the Sunbelt states. I do believe I'm in cities that are very friendly to landlord. No mention of any reform of landlord restricted rents. I'm very mindful of that, again, because it matters to me, because again, I'm buying for my grandchildren and their children. So I'm big on Florida. I'm from Florida. I'm big in Nashville. Nashville's healthcare, Texas, and some other select states. I am not in other states. I'm not in California.
What parts of Florida and Texas?
Not Miami, but north of Miami. Texas, I like areas around San Antonio, Dallas, Austin. Austin in the future will be a mecca for technology. There's no ifs or buts about it. I'm not a fan of it right now. I'm not a buyer there right now, but I will be in the near future.
That's incredible.
I'm proud of you, dude. Very impressive, man. What I would love you to do, man, the only thing you're missing is understanding some very important trends and data. Go to CoStar. That's another site that'll help you. Just go CoStar, subscribe to this stuff, but get more on Barron's. Understand some fundamentals, and you'll start following the trend. And now, just because your mentor is there, remember, just because you see me and other mentors of yours at a stage, do not try to be that. I want you to stay where you're at and win and dominate where you're at, dude, because guess what? There's only one of you, and one out of 8 billion, there's only one of me. Make sure you do your thing. All you want to do is get bits and pieces from good people that can give you some insights, and then chase the data, man. You should know. How dare you not know what a 10-year treasury is if you're a real estate investor? That shows you, my God, man, I have so much to learn. Can you imagine if you learn more about that before you buy your next deal? That means that next deal is going to be a screamer. If you're doing good now, you're just going to do better the more information you know. So don't be rushing to go buy deals. Is that cool?
Yeah, I'm trying to slow down, honestly.
I know, dude. I was 22. I'm looking at you, man. I know, and I don't expect you to do or absorb anything. I'm just hoping you get on Barron's.com. I'm hoping you get on YieldStar. I'm hoping you just get on PitchBook.com. That's another PE. You could do a lot more with your time versus just getting the next fix to go get another building. Cool?
Thank you so much.
You're welcome, man. So much love to you, and I have no doubt you're going to be a great success in life, and you're going to impact a lot of lives.
Thank you. You've impacted mine.
Thank you for that, dude. Thank you, that man. Much love. PMA.
All right. See ya.
All right, man. Great kid. Very impressive. 22 years old.